Good evening and welcome to Economics Unbound. Tonight we delve into a subject that should give us all hope and comfort. But alas, Nana, I suspect that this topic might bring us some controversy too, as we engage in the battle of ideas about what the nature of the main characteristics of the South African post-COVID recovery plan ought to be. Some say after this we should turn right, while some say we should turn left. Some want us to continue along the pre-COVID path of fiscal consolidation, mass poverty, mass unemployment, and a low growth trap that we have been locked in for the better part of 2 decades.
Tans, if some people in key positions and in the ruling party propose that we do much of what we've done before, they should reflect on the maximum that the definition of madness is doing the same thing and expecting a different result. But if I'm to be kinder, I would say they should reflect on the words of the Indian writer Arundhati Roy.
Well, I remember Arundhati Roy likening COVID to an arch. At the door of this arch, we are best advised by her to leave all our baggage and chart a new path forward. One of the many post-COVID recovery plans doing the rounds in our country points out that South Africa's socioeconomic landscape drastically changed with the advent of democracy in 1994, and this was due to the introduction of policies and programs to transform the economy and the labor market. The policies and the institutional arrangements introduced since 1994 made considerable strides in improving the well-being of South Africans. But I beg to differ slightly, as there has been widening and pernicious unemployment, and our human development gains against the Human Development Index have not been as impressive as those of our peers.
Tandeka, the IMF points out that the economy experienced gradual growth, averaging 3.3% from democracy to about 2008. While some of our fellow African countries are growing at double digits, we are the broken laggards. Tans and dear viewer, if the data is to be believed. Post-democracy, social assistance was extended to more than 50% of households and resulted in a 40% increase in real per capita GDP. But per capita GDP as a measure conceals and hides inequality, in fact, the highest in the world. Between 2009 and 2019, there was a lost decade in terms of economic development, and GDP per capita increase was 0. And the poverty rate for women will make you weep. In fact, GDP per capita has declined for 5 consecutive years, from 2015 to 2019. This is not what you call doing well, especially for Black Africans who should have realized some democracy dividend. So, the IMF is understating the crisis when it says that in recent years, the momentum and progress has slowed considerably, and some gains have been reversed partly due to structural challenges and weak growth following the global financial crisis of 2008-2019 to date. So, any recovery plan will have to pick this economy off the floor.
Nana, beyond the economic data and the figures, you need other things to mount an economic recovery. Experts say that you need the confidence of the population. The goodwill and the confidence of the population in the ruling party and its administration in power at the union buildings in Pretoria is at the moment seriously shaken and at its most fragile. You need a shared social compact with enough buy-in from society so that all involved can do their parts and play their parts in lifting the economy and the country onto a higher plane. You need an overarching sense of belief in an ideal and a cohesive enough society able to buy in.
That's so interesting, Tans. The friend of economics Unbound in the United States, the 1-minute economist, has prepared this package that explains the types of recovery possible.
If you're serious about being meaningfully informed, it's important to think for yourself rather than memorize talking points. And one of the top post-pandemic talking points is represented by the famous or infamous V-shaped economic recovery many policymakers and/or pundits are certain will be experiencing. As the name suggests, economic activity crashes aggressively but rebounds just as aggressively in a V-shaped recovery paradigm. To back up their optimism, they point to examples of stock market recoveries in particular, or recoveries experienced by various other assets. On the surface, their arguments may seem to make sense, but unfortunately, they're superficial at best because, as explained in another video, there is a world of difference between asset price recoveries and economic recoveries. Assets such as stocks can be traded instantly, with buy and sell orders being only a click away. Think of this as a rather manic-depressive endeavor, with recklessly greedy investors outbidding one another obsessively when times are good, and rushing for the exits in a desperate attempt to beat others to it when they believe the party will be over. In contrast, things move much more slowly in the quote-unquote real economy, and as such, even if you are to be optimistic, arguably more likely scenarios would involve 1. Economies recovering in the shape of the letter U, with economic activity initially collapsing, then stagnating as the economy tries to dust itself off and regain balance, and eventually moving up aggressively but not right away. 2. W-shaped recoveries, with economic activity crashing, recovering partially, then crashing again, and finally recovering properly. 3. Recoveries similar to the Nike symbol, with a dramatic crash followed by an impressive recovery but not as impressive as the crash in terms of time. On the opposite end of the spectrum, we have a wide range of pessimistic possibilities, from L-shaped trajectories which revolve around stagnation following a crash, to even worse possibilities, where economic activity crashes, seems to find some kind of support, but then crashes again. All in all, let's just say V-shaped recoveries tend to be a talking point better suited for asset prices than economic activity.
And now, Tandeka and dear viewer, the Nobel Prize-winning economist Paul Krugman speaks about economic recovery and also emphasizes that the stimulus needs to have been sufficient. He says in this clip that the American package was impressive in some respects, and he finds that it was ample.
Partly it's just being aware. I mean, we're now seeing anyone who says, oh, well, we don't really need affirmative action, and we don't really need race-based policies because the market will take care of it, or something, or that there really isn't very much racism left in America, which a lot of people were still saying not very long ago. It's clear that you need deliberate actions to deal with it, and you need some self-consciousness. I mean, it's much the same thing on sexism. I mean, there's been in my original profession of economics, we've had kind of a revelation of just how much raw sexism, and I fault myself for just being oblivious to it. And it's the same thing. I think if greater awareness is a very big deal here. And then turns out we also have a specific problem with policing in many, not all places, but in many cities. And so just bringing these things up and then saying, okay, what can we actually do about it is a big step.
We were talking before we went live on air about the sort of the combination of crises that have hit at the same time. And one thing that struck me, I was out yesterday walking with a lot of protesters in Chicago, the Black Lives Matters protests, and it struck me that we were not doing social distancing. We were right up against each other. How much do you think what's happening now will sort of compound what would already be a very difficult process of opening up for the economy?
Yeah, I mean, there were already some hints that the relaxation of social distancing was starting to, the improvement in the epidemiological situation seemed to have stalled, and there were signs of an uptick, particularly outside New York, where it's come down a lot, and this won't help. Partly because of the crowds, and partly also because it takes the people's eye off the other thing. I mean, I can guarantee you, there's not a whole lot of thinking in the White House about how should we manage the economic restart in an intelligent way. I'm not sure there was before, but there certainly isn't now. And it pushes COVID-19 off the front page. And the trouble is that the virus doesn't care about that.
Yeah.
And so if we are sloppy about this, which it seems increasingly likely we will be, then boy, this gets a lot worse.
Well, maybe we can begin to talk about that then. So are you expecting the impact from this to continue to worsen over the coming months? I've seen you've commented previously that maybe the best sort of comparison for what's going on now is not the 2008 downturn, but maybe the early 1980s recession. Where do you see the economic impact going from here?
Okay, so the virus itself is a kind of external headwind to the economy. It's not like in 2008, what had happened was that the economy had basically gone rotten. There was too much debt. There was overbuilding of housing, and so it was headed for a fall. And because of that, it was hard to put it back together. This time around, there are always problems with the economy, but this time around it's this exogenous, economics jargon, but this headwind out of nowhere came and pushed the economy into a slump. If the headwind goes away, then you would expect a quite fast recovery. Now, where are we on that? If we had really controlled COVID-19, gotten it down to low levels with an effective test, trace, and isolate regime, then we could have a really fast bounce back. But first of all, we don't seem to be there.
Yeah.
And it's anybody's guess, but at the moment, the good scenario seems to be that it drags on for a number of months. And the bad scenario is a second wave. And in that case, it's no longer really about economics. Then the other thing to say is that we're having lots of trouble with the data. Nobody's fault. It's just things are moving so fast that you can't keep up, and novel circumstances. But we probably have effectively something like a 25% unemployment rate.
Yeah.
We're basically Great Depression, depths of the Great Depression, worst years of the Great Depression level unemployment. But it doesn't feel like that. There are food banks, and so on. There's don't want to minimize the suffering, but for the most part, it doesn't feel like that. But the reason is not because the economy is especially resilient or because people have plenty of savings. The reason is because we did provide a lot of relief. Unemployment benefits are running at an annual rate of around $1.1 trillion right now, and that's made up. The majority, not all, but the majority of the wage losses because of the lockdown are being made up by emergency programs. We've had a scatterbrained, shambolic, but still important set of relief loans for small business. All of that on current legislation disappears at the end of next month.
Yeah.
So all of a sudden, unemployment benefits are slashed enormously. At the same time, and businesses have exhausted their special loans and have then start laying off workers. And state and local governments, which are required to balance their budgets and have received very little federal relief, will be busy laying off school teachers and firefighters. So I'm really worried about August,
right,
when all of this can come to a head. And of course, couple that with a domestic situation that's pretty volatile for other reasons. Wow, this could be a really, really bad August ahead of us.
That sounds absolutely right. I mean, do you look at how other countries, maybe Germany, for example, have handled the epidemiological side of this much better? Do you think that? Well,
not just the epidemiological. I mean, the interesting thing about, the epidemiological, yes. The United States did it disastrously. Hapless response. Testing was very slow. It's still not remotely adequate. And the tracing and isolating bit, you can't do that when your testing is running behind and when there are as many cases there are. So what you needed to do was a very intense lockdown to bring the infection rate down, coupled with an enormous upgrading of testing capacity. And we've done some of that, but in a half-assed way, if I can pardon my French. And so we're not, and other countries have done. It's not just, it's remarkable. It's not, Germany, yes, maybe we're not too surprised that Germany was organized enough to do this right, but Greece has pretty much, Spain, which did have a very bad case, has almost no deaths at this point.
Do you think
but the United States really do it.
By looking at all the countries you mentioned, maybe China as well, other places that sort of got on top of this in a more forceful way, do you think that their economies will therefore perform better and we'll sort of almost be able to see the cost that America pays in economic terms of responding so poorly to this?
I think so. Now, one of the things is that if countries are sensible, they will be cautious about reopening. It'll be a bit at a time. And they may need to step back at times.
Welcome back. The South African Chamber of Commerce and Industry, SACI, says that it's concerned about the delays in the finalization of the economic recovery strategy. This as the country has moved into level 2 of the lockdown, allowing for more economic activity. SACI President Mthokozisi Gqulu says South Africa urgently needs a firm and implementable economic recovery plan.
The local economy needs to recover from a double blow, one from its pre-existing troubles and the COVID-19 pandemic, further putting pressure on the already strained government finances and crippling industries and pushing many out of jobs. A NETLEC presentation puts forward 8 priorities as part of a recovery plan. They include strengthening energy security and localization through industrialization, to infrastructure investment and support for tourism. SACI says while it welcomes the move to level 2 and the easing of lockdown regulations, it is worried about the delay in the finalization of a recovery strategy.
We are concerned that we do not have as yet a firm and implementable economic recovery strategy plan. We expected around this time that we will be in the full swing of implementation of the economic recovery strategy to restore confidence in the South African economy. We are concerned that there's still delays in the finalization of economic recovery strategies. And we as organized business have already presented an economic recovery strategy to government and labor. And we expect government to speedily adopt the business plan as provided by organized business.
Efficient Group Chief Economist David Rood is skeptical when it comes to availability of finances to invest in infrastructure and the government's track record in managing such a program.
There are many problems with an infrastructure build program, especially when government is involved, because history tells us that whenever government is involved, these kind of projects simply do not work that well. But apart from that, simply looking at some of the macroeconomic aggregates, it's going to be extremely difficult to fund this. Let me give you one example. The fiscal deficit in the current financial year is going to be approximately 15% to GDP. South Africa's savings is a little bit more than that. So basically what happens is that the state today borrows long-term money and spend it on short-term current expenditure, and the total amount of money that is being destroyed in the process, capital that's being destroyed, runs into hundreds of billions of rands.
The Economic Reconstruction and Recovery Plan, as presented to NETLEC, says the enablers of the economic recovery are economic diplomacy and the Africa Continental Free Trade Agreement, a state that has capacity to deliver skills and fiscal health. SABC News, Johannesburg.
Now, government, business and labor are racing against time to adopt an economic recovery strategy for our country. This as the devastating impact of COVID-19 has plunged the economy deeper into crisis and put millions of people out of work.
The South African economy was already in crisis before the onset of COVID-19 4 months ago. COVID-19 has made a bad situation worse.
Our economy was in recession before COVID. In the beginning of COVID, we were downgraded by Moody's, so we essentially in sub-investment grade currently. We need to create an environment to encourage investment in the country, both by local business and foreign businesses. And we're going to have to go out into the market to raise money, certainly in the short to medium term. And we're going to be at a disadvantage because we are in sub-investment grade status.
The question is, what should be done?
We met the president with other stakeholders last week Thursday at NETLEC. A small team was agreed, and NETLEC is processing that, and we hope to put a small team together in the next few days to unpack the different plans on the table, to identify areas of agreement and see if we can actually move forward on those, to engage on how we deal with differences, and within a short period of time put to the present an economic recovery strategy for the country.
Government says it has billions of rand worth of infrastructure development projects that are ready to be implemented in order to boost economic growth and job creation.
These are national roads that Sanral wants to improve the efficiency of the network to ensure that the goods are able to access market, people are able to access opportunities.
But raising all the necessary funding remains a challenge. Now, the ruling party is pushing a controversial proposal to change Section 28 of the Pension Fund Act in order to make pension funds invest a bigger portion of workers' retirement savings in infrastructure development than is currently allowed.
Absolutely, pension funds are a source of funding for infrastructure finance, for infrastructure development. But those decisions must be taken by the trustees of those pension funds. They have a fiduciary responsibility to ensure that workers' pensions are and other people's pensions are protected, that they need to employ the pension funds into projects and investments that yield a return and are profitable so that the pension funds are not threatened in any way. And if that's what the ANC or ANC is talking about, then we don't have a problem with that. But if the ANC is talking about changing the law to enforce that takes us towards prescribed assets, then we would have a problem with that.
Organised Labour is yet to respond to the ANC plan. Kosatu says the issue will be discussed at its Central Executive Committee meeting next week. Bongini Mucho, SABC News, Johannesburg.
And now on Skype, we have the National NEDLAC Executive Director, Lisa Seftel, and she's joining us now to help us tackle this issue of the recovery plan. So Lisa, the President came a few days ago to NEDLAC, where Labour, civil society, government, and other stakeholders were gathered, like business, and he began to unveil the skeletons of a recovery plan that's still supposed to be given flesh. What are the basic characteristics of this recovery plan?
Thank you very much, and thank you for inviting me to your program. Last week, Thursday, the President hosted a forum for economic recovery, and there business, government, labour and community put forward proposals for economic recovery. I think earlier on in your insert, you indicated the 8 key areas which government had presented. And in that discussion, yes, that was where the skeleton, I think, was being constructed. There was a significant amount of convergence and consensus about what needs to be done. And really, what the President is now expecting from the NEDLAC social partners is to be able to identify key areas which are implementable in the short and in the long term in an action plan. So government, and just as business and the ANC have done, are building an economic recovery plan which will be approved by Cabinet. But really where the social partners will be focusing on is an implementation or action plan on key areas, sort of the 80%, the 20% that can make the 80% difference.
Now, when are you going to be able to present some kind of coherent document to Cabinet, and then thereafter the President will be able to tell all of us in the nation? When do you think the time frame is?
Well, sure. Last Thursday, the President gave us a 3-week deadline, and I think the social partners are hard at work, and I'm fairly sure that we will make such a deadline.
And what do you think, if some things fall away, what do you think the top 3 things should be? Would it be the major public employment programs that you've begun to speak about?
Yes, I definitely. Look, already I think there's a commitment from government for such big programs, and so that I'm sure will be a priority. The other issue which will definitely be a priority is infrastructure, particularly energy infrastructure and road infrastructure. And then there's also a significant focus on, could I call it strategic localization, particularly in sort of products
and that
like...
that loomed large in the ANC document.
Sure. Obviously, there is a number of areas where in the economic recovery plan which follow that of the ruling party.
Now, you heard Professor Krugman from the United States saying that when those big social relief packages begin to be withdrawn and the extended grants and the food parcels and all of the relief that happened are withdrawn, then the country could go into some kind of shock. At the lower levels of our socioeconomic ladder, people can go into utter desperation and misery. How are you going to deal with that shock when those grants are retreated?
Well, you know, within NEDLAC, we have a NEDLAC Rapid Response Task Team where also the social partners are represented. And, you know, if you listen to the feedback from them and you listen to feedback elsewhere, already we are in a very grave crisis. Already there is a lot of poverty. There are people who are not able to access any form of income. And the social partners are very concerned about this getting worse, as you say, when some of the initial relief is exhausted. And I think one of the things that has been talked about at NEDLAC is how do you able to, in a sense, phase out relief measures as you phase in measures that will enable sustainability and independent creation of livelihoods.
So Lisa, time is very important. Now, reflecting on a similar era in history, where in the United States, President Roosevelt tried to pick that economy off the floor and introduce the Alphabet program, which had infrastructure, mass government employment creation, public works programs. He introduced in a very speedy way one piece of legislation after the other. Are you ready to hit the ground running with that kind of, you know, new institutions being created very, very rapidly and money hitting the ground to provide relief very speedily? Are you in that position?
I think that is a very important question, and it is a question that I think a lot of people are anxious about and seized with. It would really have to be the state that would be able to do that.
Yes.
And I think as some of the earlier people commented, one of the criticisms of the state at the moment is that there are a lot of plans, but that implementation is not so easy. I think the social partners are very aware of that, and I think government is also aware of that. And something about this NEDLAC plan is about, in a sense, co-shaping and supporting each other, recognizing that our implementation capacities are not as strong as we'd like them to be.
Are our institutional arrangements as they currently stand sufficient, or will we have to create emergency institutions to rapidly ensure that implementation is rapid and effective? Will we need additional institutional mechanisms to make sure that the relief drills down to the very bottom? Because the package, the stimulus package, met a lot of institutional and administrative hurdles in reaching the people on the ground.
I think you're right. I'm not sure that there's a one-size-fits-all. In some areas, there are institutions, in others, new institutions would have to be created or significantly changed and capacitated. For example, if you look at something like the UIF COVID TERS, Temporary Employment Relief Scheme, the UI is used to giving retrenchment benefits to people who've been retrenched, and all of a sudden they were able to disperse over 40 billion rand, not easily and with hiccups. But they used an existing institution. In other instances, it may be that new institutions have to be created, although that is quite time consuming.
Now, will we be able, or will this state or this administration be able to institute measures to ensure that corruption does not chew up the relief?
That also has been a big concern of the social partners, and they're all united to be able to say that there can't be corruption. There has to be zero corruption.
But it's so endemic in our culture. You can't just say there has to be zero corruption. We all say that. But it is so fundamental, says Intellidex, to the culture of the ruling party.
Well, yes, that's a comment by your commentator. I think that some of the current calls for improved transparency and systems which enable transparency can be very helpful going forward to be able to mitigate against corruption.
Wouldn't it be helpful to bypass the existing systems of government that are currently drenched in patronage?
That's a hard question. And again, I'm not sure there's a one-size-fits-all for this.
Yeah.
There have also been some very significant initiatives where there hasn't been corruption in relationship to the procurement of government services.
What's your guess? You heard our one-minute economist in Mr. Polgar in the United States outlining different scenarios. Do you think we are going to have a U-shaped recovery or a V-shaped recovery or a number of recoveries and dips along the way? Or do you think we are approaching a period of sustained economic stagnation?
I think the verdict is still out. It also depends quite a lot at the moment on the prognosis of the epidemic. It's not yet clear whether we are going on a decline or whether there will be another increase, a second, what do they call it? I can't remember the word. So the projection of the COVID pandemic is also very unclear. But I don't think that anybody thinks that we're looking at U and V shapes. We are looking at a long, hard road ahead.
What can each South African do to travel this road ahead?
That's it's not, that's not such an easy question. But I think one of the things which is very important in this period is to be caring, because there is a lot of hardship out there, and we all need to care for each other in this difficult period.
We need to work hard and care for each other. Thank you, Lisa. Thanks for joining us tonight.
It's a pleasure.
Thank you very much to Lisa Seftel. She's the Executive Director of NEDLAC. Now, the South African Reserve Bank Governor, Lesetja Kganyago, insists that the central bank responded fast and aggressively to the COVID-19 crisis. Kganyago says the impacts of the bank's measures are likely to be felt as the economic activity resumes under alert level 2.
Pay the rent.
Governor Lesetja Kganyago says he's satisfied that the Reserve Bank has responded adequately to the market shocks caused by COVID-19. The bank has cut interest rates to the lowest level in over 40 years at 3.5%. It's also provided local banks with liquidity and eased some of their regulation requirements to assist them after giving payment holidays to their clients. But the central bank still faces criticism over what some say are stringent lending requirements to qualify for the 200 billion rand loan scheme.
If there are suggestions on what we could do to improve on the scheme, we will, if they would be considered, those proposals must be made to the Treasury because as people make these proposals, we must remember that the Treasury is the only institution with its skin in the game. When if these loans go wrong, it is the Treasury that loses money, not everybody else. So in the design, the Treasury is cognizant that it must protect the taxpayers.
The Black Business Council has urged commercial banks and government to work with venture capital firms that fund SMMEs, this as small and medium-sized businesses which are in financial distress as a result of the COVID-19 crisis are struggling to get approved for the 200 billion rand loan scheme.
We need to come up with innovative ways of rolling out this money. to the businesses that really and desperately need it, who are employers who must contribute towards economic growth in this country. We desperately need them to be punching at the weight or even above the weight where they are accustomed to, because that's the only way we can get this economy to recover fully.
There are calls for the release of spectrum to support government's economic recovery plan. The plan pins its hopes on increasing infrastructure spending to stimulate the economy.
We remain very skeptical that although there's poverty of infrastructure that we need to invest in, however, we know that politicians have got a very good history of deploying funds for infrastructure. However, those funds end up building white elephants where there's nothing to show for it. So the proof of the pudding will be in the action of those that were caught in malfeasance, and therefore a clean and independent organization away from the influence of politicians.
Economists say government will need to cleanse itself of corruption if it's to succeed with the implementation of its economic recovery plan. Balentle Mthethwa, SABC News, Johannesburg.
And now on the line, we have senior economist at TIPS, and her name is Niva Makgetla. Welcome, Niva. Hello, Niva.
Yeah, I said thank you. Sorry.
Thanks for joining us this evening via the phone. Niva, you've been part of a group in the government that's looking at ways in which we can transform the structure of the South African economy so that we turn around the situation that we had pre-COVID into an advantageous situation post-COVID. What are you discovering and what are your main thoughts?
So, I mean, just to be clear, we, as TIPS, we work with government, though we're not part of government directly. And, you know, so two things. First, I just want to reinforce what Lisa said, which is I think, you know, we have to look at the economic recovery in two phases as long as the pandemic is not fully in control. And we still have a very high level of community spread by international standards. You know, there are just some businesses that cannot open both safely and profitably. And I think we just have to accept that there's a risk that if we push too hard to say somehow we just want to turn the clock back to last December and all the businesses should operate the way they did then, we end up with much faster community spread, and that in turn will set back the economy. So I think it's important to be clear that the first phase, as long as the pandemic is not under control, you know, we're not really talking about a full economic recovery or reconstruction. And the first thing we have to do to make the economy work is to control the pandemic.
Now, Niva,
in the longer run,
sorry, I was going to say that what I did note from the government's recovery plan is the prioritization of security of supply, the sorting out of the Eskom problem, as well as the prominence of trade in the recovery plan, and also remedying South Africa's trade deficit with the rest of the continent. Can you speak to us a bit about those two issues?
Look, I think everybody agrees that the problem is to fix the generation side of Eskom, or at least the generation of electricity, and make sure that the electricity supply is both secure but also affordable. So one of the problems we've had is that the price of electricity has been going up very rapidly. And part of the reason is that we tended to say we need to get the supply at any price instead of saying, how do we get supply at a price that we can afford? And it's led to all sorts of problems with the electricity supply as well. I think everybody agrees about that. I think the trade issues we need to be a little bit careful about because, you know, the international economy is also in a depression, the worst downturn since World War II. And I think that to assume that they will also recover and somehow those export markets will be easy to find, I think it's simplistic. I think we actually have to be quite careful about saying we need to diversify into new and more competitive forms of production, but we shouldn't just assume that international markets will be there immediately. They also need time to recover, and we need to think about how we manage that.
So, Niva, we need to change the structure of the South African economy, and agriculture will come in for a big play from government. We need to increase the amount of arable land and give people jobs on the land. That's a key feature of the proposal that government is looking at. What do you think?
Yeah, I think they're talking about the full agricultural value chain, which is not quite the same thing as just agriculture. So I think they're also thinking about the whole processing industries, which tend to be labor intensive, where South Africa does have competitive advantage and where we also need to generate food for our country and for the continent. Having said that, I do think we need to be very careful about saying what models of agriculture do we want. So when you say we need to restructure the economy, I think we need to be clear about what are the actual outcomes we want. And I think really what we're saying when we say reconstruction is we need to address the profound inequalities and the high levels of joblessness and exclusion that have characterized South Africa. Mostly, it really is true because of the things that apartheid did to things like ownership, pay scales, education, all of the things that enable people to take advantage of economic opportunity. Agriculture is one area where there's a lot of scope for supporting small businesses, also in food processing, also in things like restaurants and so on, and retail. So the entire value chain tends to be labor intensive. But I think we need to deal with the fact that it's also profoundly inequitable, and that if we don't fix that, it's not going to help us come up with a more dynamic and integrated economy. We'll just have an enclave that can export, but we're not actually addressing the real problems in the society.
Would you need to create certainty in the land issue and policy around land tenure before we can leap into a more favorable and job-absorptive agricultural sector?
Yeah, but you also need to give people access to land. So I don't think, that we are ever going to restore peasant agriculture in South Africa. But I do think that simply to say we have 20 or 30,000 commercial farmers producing and everybody else is farm workers or downstream is not going to, agriculture will not then play the role that people want of generating a more inclusive economy or generating employment on a large scale or a larger scale. I mean, it is a major employer.
Now,
so I think the part of the problem is this, changing ownership relationships has been under apartheid on a very large scale. Reversing that is very hard, but we can't just say we were going to just accept the ownership relations that were established that were profoundly unequal. Yes, we want to do it within the law. We need to do it in a way that maintains productivity, but I don't think we can also continue to act as if ownership will remain this unequal for the next 50 years.
Now, can you please talk to us about the big employment creation schemes that are being planned by Public Works and the government? How will these absorb citizens, and how will people know that they can apply, and how can we communicate about these as we go forward?
Okay, I have to say, we haven't worked directly on those programs, and I don't know that they're at the point of being that specific that people can apply. I think, as I understand it, the main aim, there's two ways that government is looking at creating employment directly. One is through the big infrastructure projects, and the other one is through community-based employment schemes.
Yes.
Yeah?
Can you tell us about those two? Can you tell us a bit about those two and the distinctions between them? How do those two work?
Well, I mean, infrastructure investment has been used, it goes back to the New Deal in the Great Depression in the U.S., I think, and also in Europe, but even here, where government, when it invests in infrastructure, it also creates jobs directly. So infrastructure is a core function of government, and mobilizing infrastructure is a core function of government, and it can be quite labor intensive. Now, it depends a lot on the kind of infrastructure. If you're maintaining roads, it's quite labor intensive. If you're building generators for Eskom, it doesn't create so many jobs. The second thing is to say, how do we give resources to communities so that they can basically come up with schemes where they need services to be provided or small-scale construction to be done, and they decide how the resources should be used, and they employ people to that end. So it's also about building community mobilization and solidarity, as well as providing opportunities for particularly young people in those communities. We haven't had that much of that kind of program in South Africa before. Where we've had them, they've actually worked quite well. But it does require significant development of new relationships and significant, community organization.
Now, we are all waiting to see what those big unemployment figures will come out at. We understand from Stats South Africa that might be at the end of this month or perhaps early in September. But you have been looking with a looking glass and a microscope at the South African economy. How do you think we've fared on the job front? Will we be north of 40% unemployment?
Honestly, I don't like to use the unemployment figure, but I do think we will see a very significant fall in employment. And it might even be, I don't even want to speculate. 30% of the formal labor force was supported by the COVID tourist program from the UIF, which was precisely designed to ensure that people could go back to work. But many companies have said that when that's over, because there has been a fall in demand as well as a supply side stop, that there will be significant retrenchments. So I think the unemployment figures are going to be bad. But I do think part of the problem with all our statistics everywhere is they're backward looking. So the statistics will only go up through the end of June, which, was level 3. As we move forward, hopefully, many of those jobs will hopefully come back. There's another problem with the unemployment statistics, by the way, which they're seeing everywhere in the world, which is if people are on furlough and getting, the UIF TERS funding, they may say they're unemployed when in fact they have a job to go back to. So it's going to be quite hard to interpret the data.
Well, thank you very much for joining us this evening. And as Lisa Seftel said, citizens, we need to buckle up, work hard, and take care of each other. You take care. Good night.